All right, so we've got the candle basics down. We've touched a little bit on bar by bar analysis, red bars ignored, and topping tails and bottoming tails and various reversals. And let's start putting this all together and moving forward with it. It's getting more and more interesting. So we've already covered about candle language, and this is what produces others' thoughts and our thoughts and expectations. And this is what creates the pictures that we trade off of, called technical analysis, right? Which is nothing more than pictures that we've recognized from the past. And the power of our method is putting together the different concepts in multiple time frames and understanding what these pictures are communicating to us in the moment and whether we should buy, sell, or stand aside. So looking at these individual candles, if you look at them and read them bar by bar, you'll see that this concept is extremely simple but powerful. And so as we see the top one here, just imagine that you bought above the prior high of the little red bar. And as it's going up and you see that prices accelerate higher, which means your P&L is increasing, and as it goes up again, everything we say is nice. Fine. We do recognize that this bar is a little bit narrower in range than the one that preceded it, but so what? So momentum slowed down a little bit. It opened in the area of the prior bar's close and continued to go higher. Our next example, momentum slowed down. There was a bit of a retracement into the prior green candle, less than halfway. It rallied back up again. It closed below the open. So momentum slowed down. Unfortunately, to some extent, it closed below its opening price. It'd be better if it was a green one. It would be better if it closed up near the high. It didn't. It's still okay. This one here, we say it's not bad. It gapped up and then retraced. It retraced less than halfway into the green candle. Is it normal for there to be some profit taking on a gap up? I would say yes. It would have been even more bullish if it continued to go higher, but it didn't. But based on bar by bar analysis and being objective, this is not bad. Now, the next one in the lower left here, we had that big green bar. Fantastic. The next bar gapped down, and it retraced, let's say, about halfway or so. If we look at the tail, I'd say that's about halfway, just eyeballing it. And we say, why did that stall like that? Well, who knows? In reality, it doesn't really matter. Could have been news, could have been the broader markets, could have been the sector, what have you. Overall, the pattern is bullish. It's an inside bar, and what we want to see on the next one, ideally, is that it takes out the high. If the next one is here, and let's do a little advanced bar by bar. Let's assume for the moment it took out the low and then rallied back up and formed a bottoming tail bar. Wow. I would be all over that to add to the position, or if I wasn't in it, I'd be looking to get in. And that's how we start putting together this bar by bar analysis to guide us as to, are we in the trade? We're interpreting what's happening. If we're not in the trade, is it an opportunity right now based on that pattern that formed? Now, again, we're assuming now we're in the trade. This was fantastic. The next day, it opens up lower and closes below the low here. Well, depends on where our stop is, but looking at this objectively, I'm going to say, this is not what I expected. This looks like it's trouble. Let's see what happens. Now, let's make some assumptions about the next bar. Let's assume the next bar opens here and closes there. Are we in trouble? No. Everything is okay again, and we had a red bar ignored. Everything looks just fine. And this one here is a giant red bar. We say, run for your life. There's stupid people everywhere. Are they stupid? Well, let's assume so because it's not going in the direction that we thought they would, but for whatever reason, we're not going to argue with the pattern at the moment. If it's hitting our stop, we get out and we move on and reevaluate. So looking at an example here, as we would on a bar by bar basis, whether we were in it or not, we're going to view it in the same way. Why not? So as we see these reversals happening on the way down, I'm recognizing that they're not following through. And as we get these green candles that form in stabilization, well, then there was a red bar that formed at that time, right there. Now we get a bottoming tail bar and another bottoming tail bar. And again, that doesn't follow through. Red bar. And then momentum slows down again at that point. So now we've got multiple moves to the downside. And on each move down, we do see that buyers begin to step up, but they're just not able to overcome an area of resistance. And at A, we get a wide range bar, and that's followed by another wide range bar that then overcomes this swing high here. That's a pretty powerful message. And this creates one of those price voids as prices move up. And then we see that momentum begins to slow down. Right? Narrow bodied bars, narrow ranges, and then we see a topping tail form in the area of this prior high. So as we recognize that, the message is that prices might move lower, they might retrace, right, if they trade below that bar's low, but it was preceded by two wide range bullish bars. That's a pretty powerful message. So this isn't something that we would consider shorting, and if for whatever reason I might have gone long above there, I would not sell at that point because of the power of this move. Well, let's continue and see what happened. So the topping tail bar alone is not a reason to short. As mentioned, the message was ignored completely. Prices went up. And I said it should have been because of those two bullish wide range bars. That's power. Right? So that kind of power, that power move suggests a continuation higher. And we haven't gotten into multiple time frames yet, but start thinking about it. Why did this happen? What was to the left? As prices began to move up, they continued to, and at C, momentum slows, but it goes sideways. It's creating support up there at C. And then it pushed higher, and then you can see at D, it made a new high, and then closed back inside the range, which was an indication of short-term weakness. Wasn't something all that bearish, but we do recognize that it made a new high and failed. We're being objective here on a bar-by-bar analysis basis where we're looking at the individual bar, we're looking at the level of retracement and how far it moved into prior bars and prior swing area. E, we see a break and close below the recent sideways movement. So that's obviously a bit more bearish, but it hasn't violated the trend. And the reason for that is it hasn't violated major support. So momentum is slowing. It's beginning to go sideways. We got an initial red bar ignored since prices retraced back up toward D after E. So let's stand aside for the moment. If we're long, right, maybe we would want to sell part of the position, depending on the location of where this was occurring, of course, and multiple time frames. And as we do, we put all this information together. So let's look at a few more examples. Now, at times, candle patterns don't have follow-through. And at times, they're not supposed to. Well, the other times, when they're suggesting they're supposed to go in a certain direction and they don't, that's pretty powerful as well. So here we get a red bar ignored followed by a bottoming tail bar and then a move up, and notice the consolidation near that high, and then prices break out. it's supposed to keep going up. Now, as we talk a bit about retracements here, we really don't like when prices retrace all the way back down to the low of a wide range bar. Prices are supposed to stay in the upper half of the wide range bar and ideally in the upper third or so. And this one retraced all the way back, so it's not the ideal situation. However, look at that topping tail bar, right? That strongly said that sellers took control. Think about what it was before it was a topping tail bar. And it was a big green bar. So clearly buyers stepped up there, and then when prices gapped down, they rallied back up again. So this is some choppy type of price action. It does display uncertainty. Not sure what's going on here. So probably best to stand aside at that point. But that bullish bar, that green bar, did not follow through. It was ignored. And prices pulled all the way back down to the area of that bottoming tail bar where buyers stepped up again. However, the depth of retracement here, that was bearish. Now, as we get into multiple time frames, what you would know here is that that level of retracement formed a bearish pattern in a higher time frame, which could be a big green bar followed by a big red bar, or it could be a topping tail bar, depending on the pattern or the time frame that we looked at. So now the depth of retracement there certainly puts the trend in question, and let's assume that maybe this isn't a downtrend on a higher time frame. Well, this topping tail bar followed by a retracement here would certainly be a reason for us to consider a short sale. Next step in the thought process is, what's to the left? Is there a void here? Is there a void? And then we just continue bar by bar. And as it begins to break, let's assume that we are short here and we see this slowing momentum. Should we jump out of the trade? I don't think so. The power is on our side. There's a void. However, there is some stabilization. You continue to follow bar by bar. This red one was ignored, but it was followed by a topping tail bar. So at times, things are not going to move in the direction that we thought immediately, and that is okay. But we have the tools, right, to understand what's happening, and at times, of course, we're going to sit through some chop until the trend can continue. Right? Now, is that a red bar ignored? We don't know, but the trend is still down. It's in an area of resistance. We have to see what's going to happen. I think at this point you're starting to get the hang of what we're doing here and putting together these individual bars. And what these examples we're looking at here, we're not talking about trends so much as the bar by bar type of analysis, but you know where we're going here as we put this all together. At this point, we're just recognizing individual candles. Are they following through? Is it we see an immediate downtrend right here where it's broken down, where you should get green bars being ignored. But at this point where it was bottoming and they've got a green bar ignored, and then the break, wide range bar, that's bearish. And now we see some bottoming action here. And your job is to say why when you see it. What is the trend in a higher time frame? So one of the things I mentioned in another section was this type of price action that's occurring that could come after some type of a correction. Maybe the macro time frame is in an uptrend and this is pulling back to an area of major support, and you're putting together bar by bar what's happening, and this is actually giving you an entry point based on that big picture analysis. You see how powerful this is when you start learning how to put it all together? And so even though you've got this resistance over here, the big picture says take a position and see what happens. And trading, a lot of times, is about that. Put on the position and see what happens. Money management is going to be a key. And at times where things may be a bit uncertain, but we believe they're in our favor, we can give things a bigger stop. So money management and position sizing is going to be really important. Whereas we could get this same type of price action, but it was occurring after a pullback to minor support. So there's different scenarios where the odds are even higher than where they might be after a corrective action like I talked about here. Now, just following bar by bar, big topping tail. Clearly, this appeared to be trouble because it was a wide range green bar that turned into a topping tail bar and then bottoming tail bar, inside bar. Sometimes I talk about repairing the damage, and this is damaging, and this is helping repair the damage, and red bar ignored, and I think you're really getting the idea here as to what we're doing and why. Fear and greed, we can see that in range expansion. So as ranges expand after a period of range contraction, right? That's the concept of a wide range bar igniting. That's igniting a move down from a consolidation. And as prices move after a period of time, and that's the idea of a wide range bar happening and suggesting the end of a move after prices are moving down. That doesn't mean that we're going to take any action. We wait for range contraction and momentum to slow. We look at it bar by bar. Notice the bottoming tail bar taking out the lows, and then this one attempts to go down, and there's a complete retracement of this wide range bearish bar. Again, what is to the left? What is the macro time frame? Was this in an uptrend and pulling back to major support and then got this type of price action which said, hey, I should be thinking long and the possibility of a red bar being ignored. So we're getting ready based on our big picture and then looking at individual candles that are forming and seeing if they're in alignment with our big picture. Another example, bearish candles get the respect in a downtrend. Right? Look for that to continue when you see those bearish candles. Bottoming tails should have little to no follow through. 2-bar reversal, right? We call that a 180. It's the same as a topping tail bar. Right? And we talked about retracement between bars and how in a higher time frame it can mean the same thing as a lower time frame because it's about the retracement. As prices pushed lower, right, ranges begin to expand, and the process starts all over again. Bottoming tail bar, retest, reversal, what's to the left, what's the higher time frame, and so on. Take a moment and look at the chart and look at starting from the left to the right and recognize slowing momentum, potent reversals, 3-bar reversals, the same as a bottoming tail. I just spoke about that from a topping tail perspective on the prior slide. Wide range bars igniting, ending, and then ending again, and a potent reversal. And here we are looking at the examples. So momentum slows down. We recognize that as small candle bodies or moving sideways. That's a pretty potent reversal right there, a gap down from the prior high and engulfing all this whole area there. And look at how it repairs the damage. Here's a nice consolidation at resistance. This is our 3-bar reversal here, same as a bottoming tail bar. Wide range bar igniting, ending here, right? Multiple bars moving down, and notice it's in the area of number 3, that reversal there, and the potent gap reversal here. So one of the things that this chart reinforces is the fact that as much as we can put the odds in our favor, We never know with 100% certainty. We can be real confident about what's happening, but on any given day, especially as swing traders, where we're holding overnight, some news could come out that could cause a disastrous type of a gap, which makes money management so very important. And one of the other things that becomes more of a personal choice is whether you want to swing trade biotech stocks. I personally do not, because I'm not willing to accept the risk. Biotech stocks come with great reward, meaning they can double or even more in a relatively short period of time, but you could easily lose a third or half of your money in a relatively short period of time. That being said, I have no objection to owning a biotech ETF, which gives you the diversification of an ETF, the participation of what can do great within that ETF, and gives you protection as well. Biotech ETFs can go down faster than some others, of course, because of the news and volatility that comes with biotech stocks, but that diversification does give you that, and so personal choice. If you trade biotechs, that's, you decide to do so, and you accept that risk in the unknown of some news coming out that could cause a pretty big move against you. All right, pictures of selling and pictures of buying. We talked about recognizing this within the trend. So a little reinforcement of what we've covered already. Bar by bar, we recognize that as a picture of selling. Topping tails looks a bit different here. Pictures of buying, reversals, multiple bottoming tail bars, and we put that in the context of the trend. Right. You see how simple it really is when you start putting it together, these different concepts, and putting the odds in our favor. So within a downtrend, coming up to resistance and seeing multiple topping tail bars, the odds are in our favor that it's going to go lower. And the same thing in an uptrend. And that's what we need to do, is put together the concepts and put the odds in our favor. Now, many look at support, resistance, reference points as being exact points. And of course, you've been inundated with that kind of thinking by the media and other educators that use things like trend lines and Fibonacci retracements. And, we're really not talking about Fibonacci, but I'll just mention from the point of that holy grail kind of thinking, that where you start looking for levels that are based on a decimal point. If that isn't holy grail thinking, I don't know what is. And so what we do is keep things simple. We recognize reference points where there have been buyers and sellers before, and clearly there were buyers here. Prices are retesting here. You do your bar by bar analysis to see whether buyers are taking control, what is the macro time frame telling you, and so on. Repeat, right? As I mentioned, factory work. What was resistance should become support. Bar by bar analysis. Red bars and topping tails being ignored. Minor support. Reversals here. You can see the 2-bar reversal that occurred there. And we just continue the process. As mentioning right here, notice this bar right here and this reversal, same as a bottoming tail bar. And this is a bullish consolidation. And we recognize this as a downside shakeout. So more to cover here. I think you should be getting excited at this point with what you're learning and how to put this all together. And we're kind of getting in the middle of where we're going here. So we got a lot more to cover. So let's continue here. We're going to talk about moving averages next. And I'm going to show you how to utilize these so we know what's going on in multiple time frames with just looking at one. And on our daily time frame, we're going to look at a 20, a 50, and a 200, and we'll see how these come together. We're going to recognize whether they're trending up or down, whether they're crisscrossing or what have you. But right now, this is a beautiful example of a nice uptrend, and in this case with a little diamond is a pullback to the rising 20 MA, and a bottoming tail, no follow through to the red bar, which turned back up again. The gap reversal was that bar that gapped down right here from the bottoming tail bar and then closed green. And when we look at this kind of a pattern in an uptrend in an area of support at a rising 20 MA, it's a picture of money. Right? And then is there a void above here? Go for it. Right? If you think this is extended, it's not. This is actually just getting started. And we talk about moving averages. One of the things you'd recognize is the fact that over here, the moving averages were crisscrossing and close together. And this was the beginning of a move and a pullback and a retest and your bottoming tail bar there, bullish consolidation, and all of this gap left unfilled. You're becoming a master trader. You're seeing it here. This is what you're looking for as a swing trader. Let's continue. So every candle is going to produce new thoughts. This is what bar by bar analysis is about. But you put that candle's message in the context of what preceded it and the trend. So expectations can lead to failure when it comes to technical trading if they're not kept in alignment with the current trends. So you have a method for updating information. What we see, as powerful as it is, there are times when it may not follow through. So you have the tools to keep you going forward and not in the past. And that is the power of bar by bar analysis and what master traders use to keep you in the present and protecting you from disaster. And many that start out doing this never make it to the level of mastery because, well, first they don't get any education, and then they don't have a method for management, get caught up in the past, and of course that winds up with huge losses. And of course, while anyone can do this successfully once they've learned the method and the discipline and patience to apply it, most never get there because they lose too much of their money and they give up. Thankfully, you're not going to be one of them because you're getting this education and you're going to apply it and you're going to go slow and you're going to make money. And it's just a matter of assimilating this information to make it yours. And you're going to do it. Let's continue.